everyone, welcome to News Now. I'm Shivani Gharat. Now, retail investors have had a tough ride over the past 1 year. Despite sharp swings and intermittent rallies, benchmark indices have largely remained under pressure, leaving many investors frustrated, even muted, or even with negative returns. FPIs have also remained persistent sellers for large parts of the year, adding to concerns around market sentiment and liquidity. At the same time, there has been growing chatter on the street around the need to rationalize taxes linked to equity investing, especially the long-term capital gains tax, the securities transaction tax, better known as STT. Now, Finance Minister Nirmala Sitharaman was asked whether the government is open to reconsidering taxation on equities, especially at a time when retail investors are turning impatient and FPIs continue to pull out money from the Indian markets. The finance minister said the government is ready to listen and has already taken inputs on the matter. Let's listen into what finance minister told ET Now.
छोटे निवेशक है, रिटेल निवेशक है, वो काफ़ी देश के अंदर चिंतित है क्योंकि पिछले 1 साल के अंदर शेयर मार्केट ने नेगेटिव रिटर्न दिया है और ये वेस्ट एशिया क्राइसिस और टैरिफ से भी पहले देखा जा रहा था क्योंकि पिछले 2 साल के अंदर एफपीआईज के द्वारा रिकॉर्ड निकासी की गई है भारतीय बाजारों से। तो जो कई सारे दिग्गज लोग हैं उनका ये मानना है कि सरकार को टैक्स सिस्टम पे थोड़ा विचार करना चाहिए। जो LTCG है या और बाकी जो टैक्स लगाया जाता है उस पर एक बार सुनना चाहिए। तो क्या गवर्नमेंट तैयार है निवेशकों की बात को सुनने के लिए, बड़े निवेशकों की बात को सुनने, क्योंकि एफआईआई बड़ी संख्या में पैसा निकाल रहे हैं और जो मैडम हमने देखा था कि कोविड के बाद जो करीब 4 करोड़ निवेशक थे, डीमेट अकाउंट थे, वो 18 करोड़ हो गए, लेकिन अब उनका भी भरोसा कहीं ना कहीं थोड़ा बहुत हिल रहा है।
मैं किसी भी on this issue and on any other issue, we are always ready to hear, listen to people. We'll take their inputs.
Now, joining us to decode what this could mean for markets and whether there is realistic possibility of any relief on LTCG or STT going ahead is Sudeep Bandopadhyay. He is a market expert, and we have Aditya Shah, who is the founder of Hercules Advisors. Thank you so much, gentlemen, for joining us today. Let's go on to you, Mr. Bandopadhyay. Do you think government will seriously consider relief on STT and, of course, the LTCG?
Well, I'm not sure whether the government will consider or not, but they should. That's very clear.
Right.
I think the amount of money taken out by FPI is alarming. We may say that retail investors have continued to put money, market hasn't crashed the way, one would have expected. Because of the FPIs taking out money, but that's not correct. That's not the right approach. I think we need FPIs to be in the market and invest in India because we need the well-rounded economic growth and a capital market. Now, for the FPIs, if they're structurally, if they're at a disadvantage by investing in India, I think that's not desirable. Most other countries don't levy the kind of taxes we levy. And long-term capital gains tax, as well as short-term capital gains tax, is one particular item which definitely bugs the foreign investors.
Right.
On top of that, there is STT.
Right. Many, in fact, STT was, reconsidered during this year's union budget. And many, in fact, including Nitin Kamath, have been vocal about the fact that, the purpose that STT was supposed to serve has already been served. So there is no need for additional STT. But quickly, over to you, Aditya Shah, your inputs and reaction on this. And what is the kind of impact it will have both on FPIs and the retail investors?
This issue has been building up ever since LTCG was reintroduced into equities.
Right.
My perspective is pretty clear. For any country to do really well, foreign inflow should come into the country. And if the government is taxing the foreign inflows, obviously FIIs will not be happy about it. There are many aspects to why FIIs are pulling money out of India. One of the aspects continues to remain the levy of LTCG. I'm happy that the government, due to the sharp depreciation of the rupee, is willing to reconsider its position. the government must reconsider its position, try to accommodate the FIIs, and in my view, nothing other than removal of LTCG, at least for the foreign investors, will help the market tremendously. So I think that this is a good start, and the government must reconsider the LTCG concept for FIIs particularly.
Understand that should the limit of LTGC CG should be increased. What should be reconsidered? What are the points, that specific points according to you, that government should reconsider?
So, in my opinion, LTCG for any foreign investment should be completely removed. That creates a narrative. If you want foreigners to come and invest in India, you cannot have a taxation format which is much different from any other country around the world. So India is no different to any other country, and we should invite foreign money to come in India. Government stands to earn much more than the taxation that it does, in terms of the employment it generates, in terms of cost of capital that comes down. So from my perspective, I don't think the long-term capital gains tax should exist. We should revert back to the previous flow where LTCG was not there at all.
Mr. Bandyopadhyay, over to you. What is the kind of impact that STT is having on liquidity given the current market dynamics?
Well, look, when STT was introduced, it was introduced in lieu of long-term capital gains tax. Now we have a situation where both STT is there and LTCG is there. Now, this is absolutely unfair because the stated objective of introducing STT was that LTCG is being taken out. Please understand that STT definitely creates a liquidity challenge, but that's very, very minor. And I think FIIs will not mind, and nobody will mind if there is an STT, but the LTCG goes out. Now, I just wanted to make one point, and I must mention, because we keep interacting with global investors, and we have been doing it for last 15, 20 years. One consistent, grievance, I would say they have, is that why do you guys keep changing the law every now and then? You have a structure and keep it constant. Don't keep changing the rules of the game after the game has started. Now an FII is invested in India, and they are, have certain facts and figures they have checked and certain assumptions they have invested on. Suddenly a budget comes and you have changed the taxation structure. That is what they find very, very unacceptable. And I think it's a fair ask that don't change the rules of the game after the game has started. So my thought is LTCG should definitely go, and they should consider, to attract investors more and more, they should consider reducing STT, because look, end of the day, these are not such big sources of revenue for the government that they will suffer in terms of revenue if these are taken out.
Excellent segue for my next question to you, because I was in fact going to ask you what is the kind of revenue impact that government will have, in fact, revenue loss from these tax cuts if they actually consider it, Mr. Bandyopadhyay.
Well, hardly anything, because end of the day, now most people are sitting on losses. So
Right.
there is no LTCG anyway, which government is going to get, which is worth talking about. First, people have to make money in the market. Then only the capital gains tax comes in. Now, there is not much money made. Last 2 years, markets have been in a kind of a limbo, and it has been moving down only. So under the circumstances, we are one of the worst performing markets in the world. What kind of capital gains tax the government will earn? Hardly anything. And anyway, the STT, which the government earns, is again minuscule. And these are actually, if you ask me, these are rounding off figures in the government's budget. But these are big irritants for the investors.
Mr. Bandyopadhyay, you made a point that, investors in India, including retail investors, are continuing to put money into the Indian market. But Aditya Shah, over to you. Is it enough, considering that the kind of FPI outflows that we have seen over the past couple of weeks? And also, is the DII money enough, considering especially in May, there has been an erosion to the tunes of more than 2 lakh crore rupees?
No, I don't think that this is a call that if FIIs go out and will DIIs take their position. This was a wrong narrative created by the mutual fund industry in order to promote SIP. In my view, in a healthy country, both the domestic investors as well as foreign institutional investors will come and invest, and that will create a healthy environment. Foreign money is absolutely required in order to decrease the cost of capital as well as for further investments. So from my perspective, India would be a very healthy market if both FIIs and DIIs do good amount of investments into the country. Of course, the losses over the last 1 or 2 years have been due to a lot of factors, namely the currency is now depreciating because of this FII outflow of the US-Iran war that is coming in. So from my perspective, I don't agree that only DIIs are required. Both FIIs and DIIs are together required to create a healthy ownership of the market.
So much, Mr. Shah and Mr. Bandopadhyay, for joining us and putting, this particular development into perspective for us and the audience of